Congratulations, ET now. Phenomenal 14 years gone by, and I wish you the very best for the coming long term. In the medium to long term, I have two picks for your viewers. They are both small cap stocks, which I hope in the medium term will become medium to large cap stocks. The first one is BSE Limited. There I have a target of 650 for the medium term and a stop loss of 520. And the second one is Vadilal Industries. There I have a target of 3,250 for the medium term with a stop loss of 2,000. Now briefly to discuss them, BSE Limited, I mean, of course, everybody knows it, and today it's in the limelight because it sold 5% of equity of CDSL now for about 550 crores. That puts the value of investments close to about 1,500 crores. If you exclude that from the market cap of the company, the turnover to market cap currently is just 5 times, which shows you that there is value in investing at current levels for the medium to longer term. Second one is Vadilal. There it's a small cap stock, market cap lesser than 2,000 crores. They show strong growth. If you see the last quarter numbers, 20% growth across all parameters, revenue, EBITDA, profits, 20% plus growth. And for the full year, the profits were more than double. I think there, if you see the balance sheet, very strong balance sheet, their return ratios, ROC, return on equity, everything is above 20%, which shows that it's got a strong balance sheet, strong brand, and I hope that this will translate into better performance in terms of stock price. So I personally hold both these stocks from quite some time, and I believe that these are good investments for the medium to long term investor.
Wish 18 now a very happy 14. I remember doing trial shows some time back and just looks like yesterday, but still 14 years have passed. A very happy birthday to ED now. And I would recommend two stocks on this occasion. One is Astral Poly. This is India's largest plastic pipe manufacturing company, and we have seen a sharp growth in their plastic and adhesive division. Demand is coming back into the economy, real estate, and this is going to help this company giving back good numbers. Raw material prices have gone down, and there have been strong volume growth too. This is a cash-rich company, debt-free, with almost 500 crore cash in their kitty that helps into their inorganic growth. They have moved into storage tank also with a capex of 100 crore. So all in all, this company looks very good to encash the kind of real estate boom or infrastructure boom where we are witnessing. And we expect a target of around 2,300 in the next 1 year. And the second one would be Graphite India. And this company can be a proxy for steel play in the country. Steel industry is showing signs of recovery. This company is having 6 plants in India and 1 in Germany with a capacity of 98,000 tons per annum of electrode. There are two positive points going for this company. One, the raw material prices have gone down. This company uses needle coke as its raw material, and with crude prices going down to 72 odd levels, I think needle coke prices are going to help this company report better numbers. And the second one is with decarbonization. Most of the steel industry is trying to move to electric arc furnace, so that again would spur the demand. The numbers have been bad in the recent past, but going forward, we believe that the numbers are going to recover. Hence, we recommend this as a buy for the next 1 year.
I would like to wish ET now a very happy birthday. It has been a great 14 years. And on this occasion, I think one can look at market for fresh ideas. My 2 stock ideas for investors are from the large cap space. I think large cap space itself is giving great opportunities. One idea is the bellwether Reliance Industries. I think Reliance Industries at the present juncture presents a very good risk-reward paradigm. The stock, after a huge re-rating in 2020, has been in a sideways range over the last 3 years. It has many verticals now. It is a very well diversified company and presents multi-fold opportunities in the digital space, in the retail space, telecom, as well as oil and gas industry. So I think altogether the platforms have huge value embedded in them, and one can expect this value to get realized over the next few years. So Reliance from here presents a very good, safe and steady money making opportunity going forward. The second large cap idea, again from the large cap space, is HDFC Bank. Again, this stock has been kind of underperforming, which is very unusual for HDFC Bank to underperform, but it has been underperforming the market over the last few years. The stock is relatively cheaper price right now, cheaper valuation in terms of what it historically has commanded. The reason has been some sort of concern over the pending merger with HDFC. The merger process is nearly complete, and one can expect the stock to come back and start performing in line with the market, and in fact outperforming going forward from here.
Two stocks we like. One is Rolex Ring. Rolex Ring operates in two segments. One is bearing rings, which forms almost 52% of their revenue. The other one is automotive component, which forms 48% of their revenue. And companies, most of their revenue comes from export. 60% is export and 40% is domestic. And most of the bearing makers source it from Rolex Ring. So there are multiple opportunities here. As economy is picking up, we feel the opportunity is immense. And very important is their product quality is also very good. And their EBITDA margin is slightly above 20%, and management has guided that it will scale up in next few years also. China Plus One is a huge opportunity for this company, as many OEMs are trying to resource from India. So Rolex Rings has a very big opportunity. So I think if somebody is looking for 1 to 2 years, Rolex Ring will be something which will give a very good return. The second stock is Polte Patel. It is a real estate company which operates in 3 markets. One is Pune, which is a major market for them. Next is Mumbai, which is the second largest market, and Bangalore. They have a debt of 112 crores. In real estate, having a low debt is very important. They are operating on asset-light model, and in Mumbai, most of their projects are redevelopment. Recently, also they got 2 redevelopment projects in Mumbai, and their sales value has almost doubled compared to last 2 years. So they did a sales value of 2,232 crores. So and the business development which they are doing, they say almost 12,000 crores would happen in the next few months. So already they have a huge potential. I think real estate companies are likely to do well as our economy picks up. In that, being this Polte Patel being a very small company with 2,500 market cap and manageable debt, and their Life Republic is one thing which is a cash cow for them. I think this also offers a very big upside in the next 1 to 2 years.
I have 2 stock recommendations. The first one is a buy call on REC. REC has been consolidating for 12 years now. It is on the verge of a major breakout above 155. We are currently 151. So one can buy REC at around 150 with a stop loss of 125 and a target of 200. This is a 6-month call, a slightly longer term point of view. The second stock is on which I have a recommendation is PVR Inox. Deeply oversold, positive divergences, crossover buys, medium term bottom in place. So one can buy PVR Inox at around 1490 with a stop loss of 1450 and a target of 1590 from a positional point of view for a period of 6 to 8 weeks.